Hey everyone, welcome to another episode of AdMail. This is Adam Bergman, founder and CEO of IRA Financial. I'm here to help you find the answers to the most frequently asked questions from my clients about self-directed retirement accounts. If you want to learn more, you can subscribe to our YouTube channel and follow us on social media. Just search IRA Financial. Hey everyone, and welcome to another episode of AdMail. I'm Adam Bergman, tax attorney and founder of IRA Financial. And on today's AdMail, three superb questions that I'm going to summarize right now for you, give you the quick answer, and then hopefully you are intrigued at least to listen or watch a little bit further to learn more. So first question is, can I invest my Roth IRA into an S Corp? The quick answer is no. Second question, I have an employer Roth 401k. I just left my job. Can I roll the Roth 401k into a solo 401k? Quick answer is yes. Third question, I want to set up an HSA with you. Instead of an LLC, can I use a trust? The quick answer is yes. So now to learn more about the answers and get some context and color, give me the next, 7-10 minutes, and I will tell you everything you need to know about those three questions. So without further ado, let's get started. The first question is from YouTube, and this individual wants to know, can I invest my Roth IRA into an S Corp? And the answer, unfortunately, is no, not because it's an IRA rule, but because as an S corporation, there are certain shareholder restrictions, okay? And this has been in the tax code for, I don't know, since the 50s. S Corps were created. They don't make a lot of sense, but if you look at the code on the S Corporation rules, which is basically 1361, 62, they have these weird restrictions. And basically, you got to be an individual. There has to be less than 100 shareholders, one class of shares, all distributions have to be pro rata. But an IRA is a trust, and a trust cannot be a shareholder of an S Corp, just like a corporation or partnership. A 401k technically can. There's some case laws, just a single member LLC can as well, but an IRA cannot. So unfortunately, if your Roth IRA invests in S Corp, it's not a privileged transaction. What happens is the S Corp election is blown up, and essentially the S Corp turns back into a C Corp, which may not excite some of your other partners. So thank you for that question. Second question is from Colleen R. Charleston, South Carolina. Colleen wants to know, I have an employer Roth 401k. I just left my job. Can I roll the Roth 401k into a solo 401k? So as I previously referenced, the answer is yes. If you're self-employed and want to set up a solo 401k, which is great that you are aware of the solo K and you're taking the proactive step in establishing the solo K. The answer is yes. A Roth IRA cannot be rolled into a solo K. There's been some discussion over the years that the IRS will loosen up that rollover restriction, but as of now, no. But a Roth 401k can be directly rolled into a Roth 401k, as long as the solo K has a Roth component. Ours does, so hopefully you're setting up the solo K with us, because if you want to set a solo K up with a traditional institution, you may not be able to have a Roth component. So that's it. You should roll it directly from the employer 401k to the new solo K. Do not roll it to an IRA first and then to a 401k, because once it's in the IRA world, it's there. And you're going to have to, you're basically going to be stuck in the Roth IRA world because it can't be rolled back to a Roth 401k. So you have to do it directly from your former employer 401k to the new solo K. Just make sure, Colleen, that there is a Roth component. So thank you very much for that question. Third, final question of today's episode is from Lawrence T. of Brookline, Mass. Lawrence wants to know, I want to set up an HSA with you. Instead of an LLC, can I use a trust? Yeah, technically. So a health savings account is an account that allows you and a spouse, if you have a high deductible medical plan, to put away money that can be used to pay medical expenses. But the good news is, hopefully you stay healthy and you don't have a lot of medical expenses to pay. You can invest the HSA funds in alternative asset investments. So a lot of people actually want to set up an LLC, have checkbook control over that HSA. It's just easier to write checks, either to make investments or for other items. Lawrence wants to know, can you set up a trust? So I was probably one of the first people about 14 years ago to allow IRAs to be the grantor of a trust. It works in some contexts, others it gets more complicated. Why? Because trust law is very state specific. So if the trust in Florida, the trust rules allow the grantor and the beneficiary to be the same, certain other states may not, right? And you also have some potential federal filing requirements under the 1041 grantor trust return. Even though there could be a workaround, it sometimes makes it more complicated than it's worth. And I've really just pushed people to do the LLC. What's the advantage of the trust? Well, you don't need to file anything with the state. So it's technically on an annual basis less expensive. You have more privacy because, again, it's not filed with the state. So it's much harder to know who owns the trust. So that's kind of the reasons why people do the trust. I personally just think you potentially can get into more tax problems than it's worth. Some states actually impose taxes on trusts, even though they're flow through. But the way it works is the grantor, the IRA, or the HSA in this case, would set up the trust, would also be the beneficiary. The cash would ultimately go back to the IRA or 401k or HSA. And the trustee would be, the HSA owner. And a trust is a private agreement between, generally it's with several parties, right? You have the person setting it up, you have the person overseeing it, and then you have the person that's getting the benefit. So technically, if you hire a babysitter, you have a document that, essentially a trust where you create this arrangement. The babysitter gets $15 an hour for taking care of your kid. They get the money, they're the beneficiary. And, the person overseeing that is you as the trustee or the chief person in charge of the arrangement. Obviously, that's a simplified way of looking at a trust, but that's what we're doing. Instead of creating an entity with shareholders and a board or managers, it's just a private arrangement. No filings with the state, but again, there could be some state-specific tax ramifications that a lot of folks are aware of. Mostly more sophisticated accountants or lawyers from a state standpoint will handle state-specific trust questions and tax reporting. So I'd just be careful, Lawrence. You could do it, and it could very much work for you. We've done them in the past, and we'll do them if clients want to, but there should be a really good reason. And if you're just trying to save $100 for the LLC, personally, I just don't think it's worth it. I would just do the LLC because, again, the LLC will give you limited liability protection. An HSA will not give you limited liability protection. The trust does not have limited liability protection. So I would just be super careful, but technically, yeah, it could be done, and we can help you do it. That's it. Another AdMail in the bag. Thank you for the person on YouTube who dropped the question, Colleen and Lawrence. Anyone else that has questions, please don't be shy. Send them in. You can send them in to info@IRA Financial. You can hit us up on social media, Instagram, Facebook, Twitter, LinkedIn, YouTube channel is amazing. So if you have a question, don't be shy. I try to respect people's privacy. So the goal is just to learn from each other. And if you have a question, I can promise you there's a lot of people that have the same question. So might as well ask it. That's it. Have a great day. Thanks for hanging out. This is a weekly podcast that you could pick up anywhere you listen to podcasts or on YouTube anytime you want. So have a wonderful day and see you soon. Thanks.